So let's stick with mid caps and small caps. Mudar Patherya joins in with a couple of ideas of his. Mudar, morning. Let's start with Somany Ceramics, a stock you like. What's the story there?
Well, it's the number 2 in the industry as far as installed capacity is concerned, and I'm pretty surprised that it's only quoting at a market cap of nearly about 140 crores. So, number 2 in the ceramic tiles industry, market cap of 140 crores. That's my fundamental point of interest. And thereafter, I'm very pleasantly surprised to find that the results, earnings, performance is actually supporting the fact that it's an extremely low price counter. For example, I think the company's arrived at an inflection point. It reported gross revenues of about 560 odd crores for 9-10. This year, because a couple of expansions have taken place, revenues are going to be about 750 gross. And next financial year, which is about 11-12, rather it should be 11-12. 11-12 they should be at revenues of nearly about 1,000 crores. I put this company at an EBITDA margin of about 11.5 to 12%. If you take 12% on the higher side and you take a projection of nearly about 1,000 crores for 11-12, you're looking at 120 crores of EBITDA, market cap only 140 crores. Extremely interesting. And equity capital only 7 crores. The Somanys are the kind of people who probably reward shareholders with a very liberal bonus issue. I have no access to privileged information. I don't know anything. I'm only surmising that over the next 6 months, maybe a year, there could be a bonus coming up in this because the equity is only about 7 crores. It can't even get an NSE listing at this point. So I think there's a lot of upside in this counter because there's volume growth happening. There's also marginal value growth, which is actually margins growth happening. And at this price, it's extremely low.
What are peer valuations like in this space? If you compare it with the number 1 listed player in terms of valuations, what do you think is a fair value for Somany?
Tricky question, but I will say that Kajaria is quoting at a market cap of nearly about 450, 500 crores. If that's number 1, then the number 2 deserves something better. You can't have a gap of 500 and 140, which is not to say that Kajaria is overpriced. Let me be an optimist and tell you maybe Kajaria is rightly priced, in which case Somany is wrongly priced. So I think there is a mismatch, and I think this mismatch needs to correct with Somany moving closer to Kajaria rather than Kajaria coming down to Somany's level.
Hi Mudar, morning. So the other one you've got is from a completely other sector, MSP Steel and Power.
Yeah. Completely overlooked, I think that there are some counters that haven't, they're just about at an inflection point. A breakout is going to take place or has taken place in performance and the world has missed it. I think MSP Steel is one of those companies. I've been going through the last quarter's performance. They've reported an EBITDA of 25 crores. I'm very, very gratified to see an EBITDA margin of 20%. And I've also kept a little in track of, the news clippings that have been coming out. They've the structural plant has gone on stream in the last quarter of the last financial year. The power plant one of the power plants come on stream in July. And the pelletization has also gone on stream sometime in December last year. The pelletization is a bit of a kicker because it gives you margins. The structural will give you volumes. And I see a very interesting play emerging. I would expect the top line revenues to be somewhere around 700 to 800 crores in the current year. And you know why? It's a very simple logic that applies that even if your EBITDA margin comes down from 20% to 18%, you've still got 700 to 800 crores of top line with an EBITDA margin of 18 to 20%, which I think is very interesting. And then going ahead, I see a top line of nearly about 1,000 crores. So if you have 1,000 crores of top line, and worst comes to worst, even if you look at an 18% EBITDA margin, you've still got 180 crores of EBITDA. The current market cap is close to about what? 200 crores? So, the level of safety, the comfort level, I think is very significant because if you take a 2-year perspective, that from an EBITDA perspective, the investor is getting his money back. And I think that makes it a very compelling investment proposition.
20 crore EBITDA line, Mudar, what do you think it's good for in terms of earnings and a price that it could then support?
The interesting and the tricky part here is that prices are decided by, on the basis of where one stands today. But if you take a 2-year perspective where they are at 1,000 crores and then they announce another expansion or another backward integration or, they've already bid for some coal blocks. If that commercialization begins to happen, then you've got an entirely new perspective emerging. But to answer your question, let me say that if this company were to be priced at about 3 times EBITDA, which means that if you are looking at an EBITDA of 200 crores, maybe 2 years from now, and it's priced 3 times EBITDA, then you're looking at 600 crores of market cap. The market cap at this moment is close to about 200 crores. So there could be very safely a trebling in about 2 years' time, which I think is very interesting because the stock is priced only 35, and 35 goes up to 100. It makes money for a lot of people.
41 this morning. Mudar stocks up 15% as we speak. Thank you for joining in with your mid-cap ideas. That's two stocks to watch out for.